Hello, chart watchers, and welcome to this Monday, April 8th, 2019 Market Watchers Live Show with your hosts, Tom Bowley and Erin Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. All right, we are off and running again this week. We got the Dow Jones Industrial down 123 points, the S&P 500 down about 5, the NASDAQ down 12, although you can see it was down quite a bit more earlier today. The Russell 2000 also off its earlier lows, but still down 5.5 points. 10-year Treasury yield currently up about 2 basis points. Struggling, though, right around that 20-day moving average and just below the 2.55% yield resistance. Volatility index continues to drift lower. It actually is up a little bit today with the overall market down. But I think you can see over the past 2.5 weeks, we have been moving lower on the volatility index. Energy having another good day today. I know last week we were talking about how there's a really tight positive correlation between the direction of the XLE, which is the ETF that tracks energy, and crude oil prices. And crude oil prices last week were breaking out, and we saw the XLE pulling back. Talked about how we expected we'd see a bounce in the XLE, and that's where leadership has been coming the past few days. Again, leading today is energy. Consumer staples, a defensive area, also having a pretty good day after bouncing middle of last week off of the rising 20-day moving average. So that group also looking pretty good on a technical basis. Within the energy space, we've got oil equipment and services. Been watching that 304, 305 area. We're at 303 right now. Breakout above 305 on a closing basis, I think, would be a really good sign for that group. Aerospace struggling today as it got back up into this gap resistance zone. The big reason, Boeing. Boeing, after gapping down at 370 or just above 370 after the crash of that 737 MAX, you can see that the stock recovered all the way back to 400. And when it started moving higher, talked about got to get through these moving averages and also need to negotiate that 400 level. We almost did it on Friday. We failed. And now the stock is down almost 5% today, which is putting pressure on aerospace. Lastly, Symantec, top performer in the S&P 500 today. They did get an upgrade. They have been battling overhead resistance around 23.5. And with the upgrade, that is the catalyst right now for a breakout. And remember, this is in the software group, which has been one of the leaders. So I think this breakout on Symantec is certainly worth keeping on your radar. All right, Erin, it's Monday. It's the start of a new week. And I tell you what, this is not just any old week. You know what this week is?
No.
It's Masters Week.
Of course it is. How did I not think about that? I don't know. I was sort of thinking about Wednesday's beginning of the Stanley Cup playoffs.
Well, that is true as well. But I got to say that this is probably my favorite week of the year, unless I have a team like the Caps playing in the Stanley Cup Finals or the Redskins aren't anything. But, unless you have like some skin in the game for a local team or something, I can't really think of a better week for me than watching the Masters. I love watching the Masters. It's my favorite week.
I suspect my husband will be watching it as well. So who are you cheering on?
I was thinking about that yesterday. I don't know. There's so many different subplots as, heading into the Masters. Of course, you got Tiger Woods, still stuck on 14 major titles. So you got to, and he's won 4 times at the Masters. So, and he's kind of rounding into form, and he's targeting this tournament. So that's obviously one storyline. Rory McIlroy still trying to get the career Grand Slam. He's won the other 3 major tournaments. So he's still, trying to get the Masters.
Mm-hmm.
You got to say I think anyway, he's the best player in the world. I know you could argue Dustin Johnson
Sure.
But, there's a lot of different stories coming into this. I actually like Ricky Fowler.
Oh, okay. Yeah.
Hasn't won one yet. Hasn't won a major. Always is there. And he almost did it last year. I don't know. I think this could be the year where he breaks through. It's going to be a lot of different storylines, though. I can't wait for it. As you can tell.
Yes, exactly. Golf. Yes, that is your thing.
Yeah. Is this a stock market show? I just got lost.
I think it is.
Anyhow, what do we got going?
All righty. Well, on our upcoming schedule tomorrow, you have a workshop, Tom. So hopefully you've thought about a topic. We have Tony Dwyer coming in. He is from Canaccord Genuity. He is the Senior Managing Director, Macroeconomist, and Chief Market Strategist at Canaccord. So that should be a great show on Wednesday. And then on Thursday, Roman Bogomazov will join us as well. Today's agenda, we have the earnings spotlight, of course, with John Hopkins. He'll be in here later, 10 and 10. Our first symbol is going to be in Canna. And our final segment will be the sentiment report. And don't worry, we still do Monday setups. So we'll do that right after the technical news and headlines. Speaking of which, why don't we go ahead and get started with that, Tom?
All right. Well, we will first take a look at the economic reports. There was only one economic report out today, and that was February factory orders. They came in minus 0.5%. That was the actual number. The expectation was for minus 0.6%. So February factory orders definitely, not good. But again, that's kind of what the market was expecting. So let's go ahead and see what the 10-year Treasury yield is looking like. And as I mentioned, top of the show, 250 to 255. I really think this is going to be a key short-term area on the 10-year Treasury yield. We had gone straight down. The yield dropped from over 275 down to 235 over the course of about 4 weeks. And so we were due for a bounce. You can see the yield was extremely oversold to the downside, meaning that Treasuries were overbought. Treasury prices were overbought. So the Treasury sold off, 10-year Treasury yield moves back up. But this is kind of an area where you would expect a bounce to go. Now the question is, can we get back through? If you're a fan of U.S. equities on the long side, I think it would behoove you to see this break out to the upside because it would mean more rotation out of the defensive Treasury area. And if you're in banks, you certainly want to see the 10-year Treasury yield moving higher. You really don't want to see the yield curve turn negative and go into negative territory. And again, if you're looking at the 3-month Treasury versus the 10-year, it's already in negative territory, or was. I haven't looked at it recently. But if you're looking at the 2-year versus the 10-year, the 10-year is still above. And so we haven't seen it flip to the negative. And what that means, if we do see that inverted yield curve, it does precede a recession sometime. Not all the time, but it certainly would point to a possible recession. Now, I have a lot of other indicators I look at for possible recessions, and I don't see that at all on the horizon, certainly not based on the employment numbers that we've seen over time. Okay, so that's the 10-year Treasury yield. There were really no significant earnings reports out, so I'm going to jump right into a couple of things I wanted to go over today. So first, we can take a look at the Broadcasting and Entertainment Group. This is a group that is making a breakout today. Technically, it broke out on Friday, although it was just barely, and now we're adding to it here. You can see the PPO moving higher. So this is a group that I think looks pretty good. And if you say, well, I can't trade the Broadcasting and Entertainment Index, so what do I do? Well, if you go in and you find, first of all, let's go into the industry groups. And there's your Broadcasting and Entertainment. So if you know you got a breakout, you can simply go right in here, click on the link, and here are the stocks in the index. So you can get a pretty good sense that there are a lot of stocks maybe to consider. All right, well, there's so many. How do I get started? How about starting with the scooter? By sorting it scooter order, it quickly tells you which are some of the stocks you should be thinking about because these are leaders in a group that's just breaking out. So we pull up Avid Technology. Well, Avid's been on a roll for quite a while, which is why it has such a high scooter rank. You can see the stock was $4.50 back about a month ago, and now it's $8.75. So, and a lot of volume coming in. Something's going on here. I think a lot of accumulation taking place in Avid, but it's overbought. So I don't know that I would be, jumping in there. Sinclair, after sideways consolidating a big move up in early March, just recently made the breakout. Very heavy volume. I think Sinclair looks good, but again, I'd be waiting on maybe some sort of a break, not a breakdown, but a pullback. Nexstar Media. Now, these are all smaller cap stocks, so you also have to have a little tolerance for the additional risk with small cap stocks. This one bothers me a little bit because as it moves higher, it does have a negative divergence. So you want to be careful that it holds on to these breakout levels. But a quick sell-off in this stock, and I know you might think it's not possible to hit the 50-day moving average, but a lot of times with a negative divergence, that's exactly what we do. So watch down around the 100 level or just below. If it were to pull back maybe 10%, could give you a pretty nice opportunity into a stock that has been a leader. A great television, 94.9 scooter, nice flagpole. And I think we're in a flag here to the side, just waiting another breakout. I think great television, consolidating, looking very good. All right, pull up a couple of individual stocks. I mentioned Symantec earlier. They were upgraded. I'm going to stretch this chart out because I think this is a really significant breakout here, and it's in a good group. Actually, let's go up here and pull it up on my relative chart. So that'll give us a year. Here was the gap down back in May, and you see all this sideways consolidation? I think this breakout here is a character change. I mean, I could probably look back at some of these other moves and maybe already say that we had a character change, but this one I think confirms it. So we've got a big move up. Here is software breaking out. Here is Symantec versus its software peers. And look at the move all of a sudden with a breakout, an absolute breakout. We're also turning up on a relative basis. So I would want to make sure that continues to move higher. But I think Symantec could be making a pretty nice move back to the upside. Here is a key relative strength area to watch on Symantec versus the S&P 500. 0.008586, something like that. I would be watching closely. A breakout there would be a good sign for the stock. And then, of course, we know that software group has been very strong relative to the S&P. So anytime I'm getting a breakout on a stock that's been consolidating for a while and you already know that the industry group is seeing more than its fair share of money rotating in, I think this is a good sign. So I like the combination. Now, if we go back down and close at 23 today, I'm not going to be happy about the stock. I'm not going to be happy after it gaps up, has a clear breakout, and then we have a false breakout. That would bother me in the near term. But if we hold this breakout, I see Symantec going higher. And then Boeing. Let's pull up Boeing here. You know, Boeing is definitely struggling, trying to get back through 400. I would not be interested in Boeing until it clears 400. I said that on the rally. I still would be saying that. I think it needs to get back up through 400. You can see the volume that took place on this selling when we moved back up. Volume wasn't weak, but it certainly was not nearly as heavy as we saw on the way down. And you can see the aerospace group starting to roll back over again. And look at Boeing relative to the group. So the group was bouncing. Boeing just went along for the ride. Boeing was not outperforming. You might look at this and say, wow, Boeing's having a great move to the upside. Well, it was really just going along for the ride with its overall group in aerospace. So I think it's turning back down. It's broken down versus its peers. I think you really want to steer clear of Boeing at this point. All right. I tell you what, I'm going to go ahead at this point. This is a good stopping point. I'm going to go ahead and turn it over to Erin and let her go through the upgrades and downgrades with you. Then we'll get into our Monday setups.
All right. Sounds like a plan. Let us go ahead and we are going to start with our upgrades. By the way, you'll want to copy that slide or look at it in the recap later. There were a ton of upgrades and downgrades today. So I just picked out 6 of the interesting ones, but we're talking like there were quite a few. All right, so let's go ahead. We'll start with Axon Enterprise, upgraded by Raymond James today from an outperform to a strong buy. And I think this is a good choice on the upgrade. I probably would have upgraded it a little bit earlier. For me, I would be looking, of course, at that PMO buy signal, but it is intact. Notice that this move on the rally, we're seeing just the right kind of action here on the OBV. We want to see volume going along for the ride here. The only thing that could be a problem is this overhead resistance, but you can see even intraday, we've already gotten above that. So I think good upgrade here. You can see also the scooter has reached the hot zone, as I like to call it. The next area of overhead resistance, I'd be looking at that 6250 area that lines up with these 2 shorter term tops that we saw back in October, November, and of course that low back in September. So that would be the area I'd be looking at. Next up is Cloudera. Cloudera was upgraded today by Bernstein from a market perform to an outperform. That's the kind of upgrades you want to see. I like this setup here, and honestly, I think I was looking at this as a possible Monday setup as well, but opted out of that one. But you can see the the PMO is flattened, mainly because we're getting a very consistent acceleration here to the upside. So it's a little bit flat, but I think that's great. It's ready to turn itself up. It's already starting to look for the breakout here. I think the upgrade was probably a good idea here by Bernstein. Next one up. I love this particular symbol, QD, QD. Right now we can see that we have the PMO turning up, which is nice move on the OBV. In fact, we already know we're going to get a higher top than the previous one back here in March. Next up, we want to watch for volume to get all the way back here. But nice little move on QD, and we're ready for that buy signal. So I think this one looks pretty good. We are sitting, well, let me go back there. Well, let's go back here. There we are. What we're looking at as far as overhead resistance, etc. Here's that gap. I would be looking at that $13 range for a shorter term look at overhead resistance. Of course, you have all these EMAs on the way up there too that could pose a problem. But I like the look of the PMO, and I like what's going on with volume at this point. Snap. Snap was upgraded today by RBC Capital from a sector perform to an outperform. It's funny, I had just been thinking about it over the weekend. I thought, wow, I haven't heard much about Snap lately. Well, here we go. I get the upgrade today. What we have, of course, is a breakout that occurred actually on Friday from the short-term top back here in March. So now we're up here trading above $12. We have the PMO turning up, and we just recently got that 5,200-day EMA positive crossover, putting Snap in a bull market configuration at this point. You can also see that, excuse me, as far as the scooter, we're in that hot zone and have been now through most of March. So at this point, where would your overhead resistance be? I'd be looking, of course, at these tops back here in the summer, which would put us at the very highest one at 1450 for Snap. All right, let's look at a few downgrades. Southwest Airlines was downgraded today by Raymond James from an outperform to a market perform. So it's downgraded, but more into the neutral category. You've got what could have been, it looks a little like a flag, but it's got the pole, it's got a little bit of consolidation, but even had it been a flag, we're getting a breakdown. It doesn't look like we're going to get the continuation of that rally just yet, but we're holding on somewhat to the 20-day EMA for support. Still have that PMO buy signal intact. And of course, we're still looking at, look at the OBV. The OBV is really looking good right now. And there it is. So I like that. I think it's a good setup right now. And the next one up is going to be Roku. Let's go over there. Roku was downgraded today. And I know this one's always on our 10 and 10 request list. It was downgraded today from a neutral to a sell by Citigroup. So we're not looking at a neutral setup here. We're looking at a sell setup as far as Citigroup is concerned. And you can see we got that breakdown on just under the $60 range, came in, broke down below the rising bottoms trend line, setting up really, it's kind of a double top here. We could be looking at the confirmation line right here at about 60 and then look for that drop. We've already lost support at the 20-day, although that wasn't holding up so well before anyway. And now we've lost the 50-day. So I think this downgrade is probably a good choice. And you can see that the scooter had already tumbled out of the hot zone, and it's now all the way down here to under 30. And it's spent, most of this time that we've been calculating it in that hot zone, except for, of course, that November through January area where really everybody suffered quite a bit, but I guess Roku a little bit more than the others. All right, that concludes the upgrades and downgrades for right now. Let's go ahead and you can see also, like I said, tons of upgrades and downgrades here. A couple of interesting ones, Symantec, Win, Zillow Group, Elf, all of those were upgraded today as well. And downgrades, we saw Dollar Tree, Clorox, Boeing, which we talked about earlier already, Starbucks, among others, on the downgrades. I'll have this up in the Market Watchers Live recap if you want to look at it a little more closely. All right, but at this point, it is time to move into Monday setups. And you know what we've been doing is setting up our poll with 2 of Tom's Monday setups and 2 of mine and 2 of the staff's. And we want to look at what happened last week, of course. I had US Foods. Tom had Floridime. So let's go ahead and I'll take a peek at those charts. Let me get that up there for you. All right. I got to share here. Patience. Let's see here. All righty. Okay, so those were our upgrades and downgrades, but let's look at US Foods. There we go. That was my choice last week. I had it at, let's see, I got it at 35.36. We're trading at 35.12. It hasn't done much, but honestly, actually, I want to get my better chart up here for you to see because it's in my Monday setups anyway here. All right, so that's the one I'm gonna do here to look at, but US Foods, there we go. So I still think the setup looks pretty decent. You know, we just haven't gotten a true breakout here from this consolidation. I saw a double bottom, which I think you could still say is intact. So I haven't hit any of these stops. So I would have been continuing to hold it at this point, but it is a loss, I think, of about 0.25% or something like that. And then Tom, you had Floridime. So let's just put that in here. All righty. And let's see, you had it at 13.23. And we're currently at 13.18. And I know you've slipped up into positive territory, I think, a little bit today. But we're now currently down a hair. But yeah, so down about 0.5%, I think, was something like that was what we were looking at. So, and I think everybody else picked Shake Shack as far as our audience was concerned. That was the #1 pick. And I have to say, I think that the audience did better than us, Tom, on their pick.
We're going to do the same thing again with the this week with the poll. And so we can pull up a couple of those charts, I think, at the very end of the show, right before we do the that poll. But I do want to say on FLDM, first of all, I said last week, I disclosed I own the stock. So I've been riding this thing like Seattle Slew last 5 days. I mean, it went up to 14 last week. I felt like I had a great stock. And then all of a sudden today it was down 12.5 when the market was struggling at the open. But it has come back. And after trading quite a bit below that 20-day moving average, it has come back up. I really like today's candle. We'll see whether or not it holds. But yeah, I still like FLDM. I still own it, and I'm looking for it to head back up. One thing to keep in mind, too, is that this is part of the medical equipment area of the market, and this part of the market has been a leader, but over the last couple of weeks, it's been lagging on a relative basis. So I think what we're seeing is just some profit taking in the group, but I expect we will see FLDM turn up with the group in the coming days and weeks. But just my opinion, of course. No guarantees there, but I'm riding it for now.
Yep. All righty. Well, let's look at what we're going to do this week. I'll get to my setups here. There they are. All righty. So let's start with Avangrid. This was one. I did my general PMO scan, and they're mostly from there. I think that all of them came from that scan, which has been printed a lot of times. If you just look at Erin Swenlin and a PMO scan, you'll find plenty of them. Liked this one. Really, I liked it on an intermediate term basis more than the short term because of this formation here. You could probably say it's sort of a loose cup, double bottom. Again, I'm kind of picky about my double bottoms, and you'd really need to be in a decline before you form them. But nonetheless, I like this. We've gotten the breakout today from the $51 area, and we haven't finished there. We managed to get to the top, and now kind of looking at not the best candle in the world, I suppose. But I do like that breakout, so that was one of them that I thought was a possible candidate. Berry Plastics Group. This one is in materials. You can see we're getting that breakout above $56. We've got the PMO buy signal here. It's not particularly overbought. I thought this one looked pretty good if you're, if you want to take a shot at that particular sector. Finisar. We ended up with, on the scan, you can see I don't have the PMO buy signal just yet, but it is about ready to come in. And the last one was pretty darn successful. So, and it doesn't seem to whipsaw too much, the PMO. It seems like we get these signals and we don't really see another one until we've actually gotten some action. This morning, it hadn't actually broken out above that $24 level when I was looking, and it's now above all of these tops. So honestly, I think this one is a pretty good pick. I would have picked it except for the fact that it hadn't broken out at all. Right now, currently, it is. So I think that looks pretty good. Next one I had was Hilton Worldwide Holdings. And I think this one has a really, I think the area of the market it's in is still pretty healthy. We've got the breakout from that previous top, and it does appear to be holding it as support. The PMO is rising toward a signal, PMO buy signal. And I like the way the OBV is behind this move. You can see all that volume coming in here. So if we can hold that level at the $87 level, it looks like, that would be great. And I would look for the move up and off of that. The only issue I have right now is we could be looking at a short-term pullback, kind of a pause on this one, which is why I didn't pick it for the week. But I don't know. I still think Hilton looks pretty good. Masco was another one. Look at that rounded bottom here. That's just the kind of thing you want to see as far as the cup shape, and then looking for that pullback for the handle. You've got really nice PMO movement here turning to the upside. Look at the OBV. It started to trend upward right here. We still hadn't actually gotten the rally starting, but we were already seeing some good stuff out of the OBV. And now you do have a scooter in the hot zone for Masco. So I think that looks pretty good in industrial. Let's skip Sunrun and go to Whirlpool. All right, this one I do like this one. I'm just, I don't know. I've been thinking about buying this one. It's kind of been a slow runner, slow mover, but I think this one looks really good. As far as Whirlpool, it got the breakout above that 20-day EMA. You can see right here that the PMO has turned up. It's not quite to the buy signal yet, but we do have that break above these little tops and this little bottom over here. So we got that breakout. I'd be looking for a move to test that 145 area for Whirlpool. OBV, I think, looks still pretty healthy. And notice that this scooter has just now entered that hot zone. But the one that I ended up picking was Sunrun. And this is in the energy space, which Tom was talking about a little bit earlier. I really like the look of this one, and here are the reasons why. Number one, breakout on Friday and now today, continuing that. If we can get that close also again above that 1520 level, that's very positive in my opinion. I like that breakout. Like I said, PMO ready for the buy signal. Volume is coming in nicely as far as the OBV is concerned. Notice that when you start here at this low, we do end up getting a declining trend right through here, but the OBV was actually starting to move up, and we were starting to see some interest as far as accumulation. You've got the scooter sitting in the hot zone, which it has been since February. So renewable energy, I'm liking this. So I had in here that I got it at 15.19. Of course, it's already made its move. It's starting up, but it's at 15.26 now. My target is $17. My stop, if I were playing this until Monday, would be tight right around 14.50. I'd be watching that 20-day EMA very closely as a stop. But if I was doing this, if I were making this trade for an intermediate term move, I would lower my stop below where everybody's probably going to see it and sell, and that would be a great area for a bottom. So I would wait until at least 1350 as a stop for the intermediate term, and of course my upside target would be more than 17, more than likely. So that's what I have. Tom, what do you have on your schedule?
All right, I am going with Domo, D-O-M-O. It's a software stock. It's back to the scene of the crime after its earnings report. Gapped up, opened at about 37.5, 38 bucks, went all the way to 45. And you can see very strong volume on this push to the upside. Stock traded almost up to 47.5 a couple weeks ago, and now has pulled all the way back down to this area where it broke out from. So it's just in a much better position in terms of not being so overbought. The fact that it's pulled back, some of the software stocks, you can see software overall has just gone sideways. So when you look down here, you can see on a relative basis, software has been going down relative to the S&P because software has simply been going sideways and taking a break while we've seen the S&P continue to move higher. So that's allowed the DOMO with the profit taking to pull back a little bit. And, when you look at some of these, best times to get in is generally after you've had a pullback in relative strength, which is what I think we've seen here with DOMO and the fact we're now down back to gap support. So I like the stock right here. 37, well, let me update, just make sure I got the latest. 37.33 is the price I will go with. It is down 53 cents today, but I think it's at a good spot. I actually do own DOMO. I did buy this. Actually, I bought it on Friday, so I really like this one. And then we'll see. Now, as far as some of the other stocks, go through these pretty quickly. AFL, this is AFLAC. On a relative base, well, first of all, you can see it's pulled back pretty close to where the lows were previously. I think the fact that it gotten up to 50.5 and has pulled back a couple bucks, $1.50 where we are now, I think that's a pretty good sign. Overall, life insurance trying to make a move higher. This pick is going to be somewhat dependent on the 10-year Treasury yield because life insurance stocks do tend to go with the 10-year Treasury yield. So if the yield continues rising, the stock will do well. If the yield falls, we're going to need to watch these support levels to the downside. CRNT, I've had this one on my list for a while. I don't own this one, but it is right near a key support level down near 340, 350. The stock, keep in mind, this was a stock that went from $2.70 in mid-September to almost $5 7 or 8 weeks later. So it was almost a double in about 8 weeks. Went back up, put in a double top. I think this is a really key area of support to hold. It has been kind of pulling back a little bit, but volume's been much lighter than what we saw on the selling in February. This is just a key area. I'd look for a pivot and maybe a reverse back to the upside on CRNT. FSCT, this is Forescout Technologies, another one that has been performing really well. When you look down here, the DJUSDV, and if you ever have a question as to what area that is, you can always just type it in. It'll tell you right here. So in the consumer service space, you can see the group has been rising relative to the S&P. It came off of that low at the end of 2018. So the group, another breakout would be very bullish. And you've got one of the stronger stocks in the space. It has pulled back a little bit on a relative basis, but that was a huge relative move during this move up. And look at the volume coming in. So I think FSCT looks really good. LW, oops, actually, let's keep it over here. We'll keep it on the relative charts. LW gapped up with earnings. You can see the volume spike. Stock was trading almost 79 after earnings, came back down, and on Friday actually printed a piercing candle. So I would have been looking for at least an intraday move higher today, which we've seen. I like it best if we get back down close to that 70 level, maybe even a second entry at 68. I'd keep a fairly tight stop below that area, but I think this one looks good. PBYI, if you really want to roll the dice, this was a stock that gapped up on very heavy volume beginning of March, has pulled back. We put in a bullish engulfing candle on Friday. So I would maybe be watching that 33, 33.5 level. I wouldn't want to give it too much room to the downside. But if it reverses from here, move back up near its high of 43, that would be more than 20% from the current price. So I think that one looks interesting here. Stitch Fix is the other one I put into the poll for this week. I think it's sitting right on gap support. So I love the reward to risk here. I don't own this one yet, but I'm watching it very closely. What I'd like to see is maybe an intraday breakdown with a reversal into the close. Shopify, SHOP. You can see Shopify has been a great performer, sideways consolidating. Coming back down, though, it's about almost $20. Well, it was almost $20 off its high and tested the breakout level around 193, starting to turn back up, consolidating. But again, I think part of it is the fact that software has not broken out. Software is underperforming the S&P on a relative basis, and that's been a little bit of a problem. There were two more. I'm not going to go over them, but what I will do is show you, if you're in my blog, and there's a chart list here. If you click on it, you can pull up these stocks I just went over with some annotations on them. And at the very bottom after Shopify, you'll see SMAR, which is Smartsheet, and WMGI. I own WMGI. I like this double bottom here. We'll see whether or not that holds. But you can check those out on my blog. So let's summarize what we just went over. Again, Erin has her pick. I have my pick for this week, and they are part of today's poll, which you can fill out. So that is it for the Monday setups. And there you go. There's the stocks we just went with, Run and DOMO. And
I've got to get some prices there here. Let's see.
Yeah, I think mine was 37.33.
Okay.
And
mine's 13.24.
Okay, so that is what we will go with.
Perfect.
Right. Well, let's move on because we do have Mr. Hopkins waiting in the wings here. This earnings spotlight is brought to you by earningsbeats.com. Earningsbeats.com provides high reward to low risk trading candidates, and they'll teach you to focus on the combination of strong fundamentals and strong technicals. Learn to exercise the patience and discipline of an experienced trading service. Earningsbeats.com. Better timing, better trades. Mr. Hopkins, I know you're a golf fan. You ready for the Masters this week?
You mean like ready to play in it or watch it?
No, I've seen you play. I never once thought that.
Absolutely. I mean, it just, this time of the year, it's an exciting time of the year because you got the Masters coming up. You got the NHL playoffs coming up. You got the basketball playoffs coming in. We got This is it. I mean, you got NCAA tonight. You got the whole thing going. So it's kind of exciting. And yes, the answer is yes. Very excited about it.
Well, you do know that there is one contest that they have, or actually, I don't know if it's a contest or if it's just the pros showing off. But when they do over the par three, they hit it, they scull it along the water. And they actually skip it across the water and up onto the green.
Yeah.
I think you got that shot in your bag.
I got the shot in the bag to get in the water. There's no question about that.
It might
skipping it. It might. I wouldn't count on it. I wouldn't put any bets on me.
All right, I'm picking on you. I'm going to be done. I'm done picking on you.
No problem at all. Hey, listen though, you pick on me all you want, but this is kid in a candy shop time for me because earnings season getting ready to kick in.
Yep.
And over the next really couple months, full 30 days, and even beyond that, you'll have thousands of companies reporting earnings. So, the period, like the last month or so, it's been pretty quiet. It's kind of amazing how the market and the S&P in particular is like on a really great day away from its all-time high, and everybody's saying how lousy earnings are going to be.
Yeah, I don't know that I'm agreeing with it. I think a lot of estimates, and I know when Mary Ellen's been on the show, she's talked about this a little bit. A lot of estimates have been lowered so much.
Yeah.
That lowers the bar for a lot of these companies. I think you're going to see more positive surprises than you think. That's what the market is telling me by this huge rally as we head into earnings season. But
yeah. Hey, listeners, a number of stocks to go over so we can kind of start cranking.
Okay.
But, I did my article this weekend, and I featured a couple stocks, and one of the stocks was Trade Desk.
Okay.
And the reason I put Trade Desk in there was to show people, that if you go back to their earnings, that big green bar, volume bar, big gap up, that was, 30-some%. Then it pulled back, perfectly held at the, 20-day and made another move up, another, 14-15%. Pulled back again, made another move up, 13-14%. Now it's pulled back again and maybe setting up, if the market cooperates here.
Yeah.
could be another move. So the whole point is, Tom, people follow stocks that beat top and bottom line. And even if you don't get it the first time around, you got sometimes multiple cracks to get in on pullbacks.
Yeah, I know you and I talked about this one about 8 or 9 days ago when it hit this support area here, and this was one of the stocks that you had alerted to the members.
Yes, became a trade alert.
Yeah, because I mean, this one after making the big breakout, a couple things I look for when you get a huge candle like this with that kind of volume. I mean, that's game changing kind of volume right there, and having a hollow candle like this, I think, is really important because it's telling you with all that volume that it was mostly buyers that were coming in. When you get gap ups, a lot of times you've got the market makers on the other side of the trade providing liquidity. And that's why you get gap fills back to the downside. In this case, rather than gap up and move lower, you can see it barely budged lower after gapping up. And this was a $22 gap up from 150. This was not a small gap.
No.
It just continued pushing to the upside. So I just wanted to make a point. 2 areas when I see something like this is I want to see where it first comes back down to. So here it came back down to 180, and then the buyers came right back in again. And you can see the volume pick up those 2 days when it went from 180 all the way back up to 205. And so when it got back down to 180, really the 2 key areas are that 180 level and then 175. That's the top of this gap support. So this thing bounced perfectly right off of 180, got up close to the high, and I think it's consolidating, but very, very healthy chart, no doubt.
Very healthy. Another stock we just issued to members, PANW, last week. We put this out, as a trade alert. You can see it came back. It made the same thing, beautiful move, nice volume, nice pullback and consolidation. Now pull back to the 50-day, second test today. I think this one could be setting up for a move higher.
Yeah, I really like PNAW, and full disclosure, I actually own this one as well. It is on that strong earnings chart list that earnings beats, John. And yeah, I like it partly because of the area of the market that it's in, telecommunications equipment area. But here you can see the pullback after the gap up with earnings. And again, look at the volume. Now, notice the difference in this candle. So instead of getting that hollow candle where you have buyers throughout the day,
yes,
actually printed that black candle. It's a filled candle, meaning that it closed below the open, and I think that sets up weakness in the near term when you see that. And so we got that, and then this is where the buyers came back in. So I agree with you. Actually, I got into this one on Thursday of last week, and I think this one's got a shot to head back up to 260. And I would watch closely, probably around that 230 level. Close much below 230. A little concerned.
All right, now let me whip through some stocks here. These are stocks that have earnings coming up over the next week or two.
Okay.
And let's pull up, starting with Delta, DAL.
Yep.
And you can see that's a leading airline stock, but as you discussed with me, your airline stocks still haven't cleared their February highs yet, so you wonder what might happen here.
Yeah, this one, is going to be interesting because Delta is definitely outperforming. I mean, here you can see it broke out relative to the airlines after consolidating for many months. It's started to perform better versus the S&P, but you can see as of 2 weeks ago, it was down close to a 52-week low, relative low to the S&P 500. So all of a sudden, Delta is getting some love coming in. But the group, as you said, John, has not broken above that 270 high in February. So I think there's some mixed signals here. A lot of folks jumping in before the earnings report, which may be a good sign. But keep in mind the airlines overall have not been great.
Okay, another one coming up, Fastenal, F-A-S-T.
Yep.
That's an industrial supplier. Broke to a 6-month high, leading stock in the group. And when you see something like this, might be giving you some clues that their earnings could be strong.
Yes, this one I really do like. Now, the overall group relative to the S&P has started to pick up the last couple weeks. It's mostly sideways, I think, when we look at the last year. But there is no doubt Fastenal is one of the better stocks within this group. And that's what this relative chart is telling you here. So I agree with you. I think you got a really good, a lot of buying going on in this stock heading into earnings report. I would be surprised if they come up weak.
Here's one in the banking sector, JPM. It's been a bellwether stock, showing relative strength over the past 5 weeks, but lagging the S&P because banks have really been hit with the yields falling and treasuries. But you got JPM, WFC, and PNC on Friday. That's going to be something to watch.
Yeah, and I'm sure a lot of different bank stocks are going to take their cue from Wells Fargo and JP Morgan that report on Friday. Of course, a number of banks report next week as well. But this is one of the bellwethers for sure in the banking area. And I really don't, I mean, I'm just not a big fan, but part of it is, like you said, the 10-year Treasury yield has really been struggling. We got a bounce in the Treasury yield, and look at what happens to JP Morgan. It moves up. But the problem is it hasn't moved back up. You know, banks haven't broken out. And JP Morgan, although it has started to show some relative strength, is still way below where it was back in January when it hit its relative high. So, or maybe that was actually in December. So some work, you know, we're going to have to see some work here. Look at JP Morgan relative to the S&P 500. Yep. Until the banks get going, until that Treasury yield really starts to rise, I think the banks just have too many headwinds right now. This one will be interesting to watch. I would not be holding into earnings.
One thing kind of impressive when you think about how the market's held up well, it's done it without the banks. So imagine if the banks get going, it could be interesting.
Yeah, financials actually, I wrote about that in my blog this morning. That's really the only aggressive area of the market that is not at least keeping up with the S&P 500. And most of the groups have been leading the S&P, which I think is very bullish.
Couple of remainders here. INFY, you might recall this was one of your top 10 picks from the February 19th event that we had, the top 10.
Yep.
And it's been a leader from improving computer service area. This one looks also like could be setting up for a nice move, a good solid results.
Yeah, this one I'm kicking myself because I never did buy it. It pulled back a couple of different times. February 19th was when we talked about it. And you can see here, this was the one I'm really kicking myself because the stock got back down to about 1030, 1040. It was a setup of mine here on the show, on a Monday setup. I don't think it was my featured pick any of the weeks, but I think it was one that I talked about. But this one has gone up probably 10% in the last 3 weeks as it heads into earnings. I agree. I think this one's going to set up for a really nice report. Wouldn't be surprised to see them beat.
Now you got Goldman Sachs. GS been flat for about 3 months now. Not really being endorsed so much by Wall Street into earnings. We're cautious right now. And it's going to be interesting to see what they report and how the market reacts.
Yeah, I agree. I think part of the problem here is your investment services. Look at it relative to the S&P 500. I mean, the first 3 months of the year have not been good. So this group is being shunned by Wall Street. And you take a look at Goldman Sachs relative to the group, and it has outperformed the group, but that really hasn't enabled it to outperform the S&P because the group's been so weak. So I agree with you. I think this stagnant action here, I think this is another one I'd be really cautious with heading into earnings.
Got J&J. They're coming up to report. They're trading near a 6-week low. Hasn't been you there, Tom?
Yeah, I'm here.
Sorry, hasn't been a great perform relative to its peers. Maybe some better stocks out there in the pharmas.
Yeah, there are definitely some better stocks. I mean, J&J, here's a relative to the pharmas. This is what you're referring to. I mean, literally, it is right now at about a 10-week, 11-week low versus the pharma group. And as it heads into earnings. So what that's telling me is there are probably some others out there, and I'm just going to bring up a couple real quick that I know have been great performers in the pharmas. Here's Merck. Look at the relative strength of Merck versus the pharmas. Look at Eli Lilly, and let's pull this chart up and take a look at the relative strength. I mean, these are the kinds of stocks I want to own, especially if I'm heading into earnings. These are the ones that have been talking to Wall Street. Management teams have been talking to Wall Street. Wall Street's going back to their offices. They're buying for themselves and for clients. And so these are the ones I think have a better shot of beating heading into earnings.
And the last one, but a big one. I mean, you never know with this stock, but Netflix, you know, which has been a cult stock for quite a while. Maybe finally, Tom, some of this, you know, interference and other people getting into the space of streaming is having a little impact because the stock really has gone nowhere in the past 3 months.
Yeah, you remember back in the end of December, early January, I mean, Netflix recovered faster than just about every stock.
Yes, it did.
I mean, 230 to 360, a 50% recovery, and for 50% surge in their market cap in about 3 weeks. And they were talking about subscribers this and subscribers that and how it was going to be great. But literally after hitting 360, look at where we are today. 3 months later, while the market has been flying, we're at 361. So all of that excitement got a lot of folks into the stock and chasing, and we've gone nowhere the last 3 months with Netflix. This one, you know, when you look at it relative to the internet stocks, has been declining for about the past 2.5 months. I don't know. I mean, what do you think is going to happen? You think we're going to get some good news out of Netflix here based on the way it looks?
I don't think so. But they do have a way of just surprising the market. But I honestly do believe, everybody said they're just too far ahead of the pack. But honestly, you do have, Apple announced they're going to get into streaming, right? You've got AT&T, you've got Verizon, you've got a number of companies, and maybe sooner or later, that's going to catch up with them. But I'm not going to buy it into the, into the earnings. But would I be shocked if it went higher? Wouldn't be shocked, but it doesn't right now. Looks like it's not really being accumulated.
Yeah, it's just the sideways consolidation. Again, I realize it had such a huge move. You got to give the stock a break after that kind of recovery. But 3 months while the market keeps going higher and doesn't seem to be able to push any higher. I would just say I'm cautious as we head into the earnings report.
Listen, that's all this talks. I want to mention one thing which listeners might be interested in is we have our strong earnings chart list, and we're getting ready to update it. But I put in my article over the weekend that if somebody's interested in seeing the stocks on there, there's a link they can click on the article, and I'll send them the actual list. It's got over 200 stocks on it, and that'll be updated, as the earnings season continues. These are the kind of stocks you want to be looking at. The charts of the companies that beat top and bottom line. They pulled, like some of the ones we just looked at. If you're going to be involved in the market, looking at some of these stocks is really worth considering.
Okay. This was the link you were talking about in your article?
Exactly.
Okay.
Just, shoot me an email and I'll make sure you get a copy for nothing.
Okay. Really appreciate it. Always fun to have you in here. Thanks, John.
Enjoyed it. So long.
Okay. And there you have the earnings spotlight summary. These are the stocks that we went over today. I threw a couple others in there just as a comparison for J&J, but you can see those were not only some stocks that have reported in the past, like Trade Desk and Palo Alto Networks, but then the upcoming reports. And we talk a lot about how the relative strength, I think, gives you a lot of clues as to what Wall Street knows about these companies as they're heading into their earnings. Doesn't necessarily mean, by the way, even if a company comes out and reports strong results, that doesn't necessarily mean that you're going to have a gap up, because when you get these huge runs to the upside heading into earnings, a lot of times the good news is already built in. So you've heard buy on rumor, sell on news, and sometimes they are that type of an event. But if they come in and they beat, and you see a gap down, a lot of times that's an opportunity to get into some of these stocks. So I think it's a great idea to be looking at relative strength as these stocks head toward their earnings dates. And as John mentioned, we have the start of earnings season really upon us now, and it's going to be picking up the next 2 or 3 weeks. This is an exciting time for sure. Okay, Erin, we're going to go into the 10 in 10, and I know you probably have some RRG ready. So why don't you?
I do have an RRG ready. Okay. I am having mouse problems today.
I've got your screen.
There we are. Okay. All righty. Yeah, my mouse keeps dying. I think I need to buy a new one. All right. So here is our RRG. We had quite a few heading in that northeast direction, which is considered the bullish direction. But a lot of stocks not sure which direction they want to go. And then as far as our sectors go, you can see that our big request would be technology and discretionary. So let's go ahead and get started with our first one, which is going to be Encana, ECA.
All right. Encana, and I'm actually just trying to annotate it now, but I'll bring everybody over. Okay, so what I'm looking at here on ECA, number one, we set a high in mid-March. We haven't been able to clear that yet. So that's a little bit of a hurdle. But the bigger hurdle really is just that in the exploration and production stocks, we have yet to get a breakout. We've been going sideways for the last 3 months. And this is with crude oil prices moving up quite a bit. So I'm still a little skeptical of the group overall. But even if we get the breakout, that would certainly be good, not only for Encana, but for many, many stocks in the space. This is not one of the stocks that's literally flying here on a relative basis. So it's gone up a little bit relative to its peers. It's gone up just barely versus the S&P 500. So if you're looking for outperformance, I don't know if this is a stock. At least let's get a breakout first before we start talking about wanting to own this stock. I think there are a lot of others in the space that are better relative performers. So for that reason, I would avoid it and wait for either the breakout or maybe look at another stock within the space.
All righty, let's see. The most popular in the chat room. And interestingly, it was the most popular on Thursday when I was here, is FXI, the China ETF.
Yeah, I mean, we got a nice breakout, and I think we talked about that last week. So I continue to like this, especially as long as we, I don't need it on that kind of a chart, but let's pull it up over here. As long as we continue to hold there are two levels that I would watch pretty closely here. And one would be the resistance, which was broken. That now becomes support. So let's just call it about 45.10 or so. And then also, I think we've got trend line support. I mean, literally, I could draw an ascending triangle here with the equal highs coming across. And then here you've got the rising lows. So I think the bottom of this triangle would be the other area that I would be watching. I don't think it'll go below the 20-day moving average, but if it did, I think I would be watching right here just to make sure that this trend line holds. But I like the breakout. You got an uptrend, sideways consolidation, continuation pattern. PPO looks good. You can see a lot of interest in this ETF over the course of the past week or so. So I think there's a lot of positives here. I think the negatives built in to China as a result of any kind of a trade deal that might not be beneficial for them, I think all of that's built into the chart. And I think now folks are just genuinely excited by some of the data that's coming out of China and the hopes that this deal gets ratified. So I think FXI looks good. And again, as long as I would hold maybe around that 44 level, I'd be okay owning it.
Okay, let's see. The next one up is IWM, the Russell 2000 ETF. Lots of interest there.
All right, small caps definitely been underperforming, so got a little bit of an issue with that. Part of it is we just need to get through the resistance that was created from that February high. So I think that is the first line that I would annotate here. We just need to get through about 159. If we can get through 159, I think you'll get more technical buyers into the small cap stocks. To the downside, we want to watch about 149. So let's just call it 149 to 159 as a trading range. It's always better to see the Russell 2000 outperforming. We really have not seen that since we topped back on an absolute basis back in February because the S&Ps continue to go higher and the IWM, as you can see here on the chart, has not. So we've got some more technical work to do. I like the IWM. I think the market goes higher. I just don't know if the Russell 2000 is going to outperform. I'd need to see the absolute breakout first, and then we could reevaluate.
All right, let's see. Next one up. I think you've heard of this one, Amazon.
Yeah, that one I have heard of before. It's a very illiquid stock. No, it's not. Yeah, if you multiply the number of shares it trades times its price, you'll see the dollar volume is pretty significant on Amazon. But the recent low, after breaking out, you can see getting through this area right around 1750 was important. We've gone back down on 2 or 3 different occasions. We've held 1750, and now we got the rising 20-day that's above it. I could probably show you on a relative basis, and I will in just one second. But I think I would maybe be watching the combination of that rising 20-day moving average and that price support level. And as long as that holds, I'm okay with the stock. But I do want to just pull it up quickly on the relative chart because this is a stock that has not really been performing well on a relative basis. So here's your broadline retailers. Here's the stock relative to the broadline retailers, not looking too bad. But you can see relative to the S&P, we have not even taken out the January relative high. So yes, we're beginning to strengthen, starting to look pretty good, but we need to break out on a relative basis. Pull back, best reward to risk entry, I think, is between 1750 and maybe 1780 on a pullback.
All righty. Let's see the next one. First one of the day requested, Ciena, C-I-E-N.
Yeah, I'm still looking for a reversal here, but it's got to get back through its 20-day moving average. You've got a great group. Telecommunications, you can see, has been on fire And relative to the S&P, it has been great. Now, when you look back, Sienna relative to the S&P and relative to its peers had been very strong until the last 5 or 6 weeks. And all of a sudden, it has been very weak. So what I would be doing and watching is I would want to make sure that $36 is not lost, because you are in a strong group. I still do like this stock. If it begins to move higher, I would expect it to begin to move higher in a big way. This is an area I would be watching. Recent lows have been holding about right around 36.75. And I think you've got really good support just below $36. The recent high is your target up near 46. So I think you can see down here, your reward to risk is very strong.
All right. Next up, Canopy Growth, CGC.
Great. Canopy. Okay. It's just sideways consolidating. I think I've mentioned this one before. I just want to make sure that we hold on to this recent area of support. I'm going to draw 2 lines. That was the low right here in February, and then another low off of this huge uptrend with heavy volume. When the selling finally came in a little bit, we went down to about 40, and you can see that held about a week and a half ago. So I think $40 is a level to continue to watch. To the upside, I think you got your resistance up closer to about 51. So again, reward to risk, not too bad here. As we've been consolidating, volume's been dwindling. I think that's good, but we want to hold on to 40. If we break below 40, I could see a lot of sellers, technical sellers, jumping on board. So be careful there.
All right, let's see. The next one I have for you is Play, Dave & Buster's.
Yeah, Play, I think, had a little bit of a character change with their earnings last week. Nice move up. You can see it had gone down, kind of going sideways. Wanted to get it through 54. It made it through 54. It's pulled back, but I expect we're going to see buyers come in north of 51 if we get down that low. So let me annotate this, show you what I'm referring to. So we had the downtrend. I believe with this heavy volume, we got to change a character. We gapped up. I think we could hold around the 53 level, or this tail. Look at the volume. We gapped up to almost 54, went back down to 51 and change, and the buyers came back in, sent it up to near 56. So I think if we get back into this range, I'm going to say 51 to 53. I think that's a buy zone on Play.
All right. For our friends in Canada, let's see. Manulife Financial Corp, MFC.TO.
All right. MFC, oh, that's right, can't do the M. Let's just do it this way. Yeah, I think you got a nice little cup off of an uptrend or sideways consolidation. Great volume trends. So first thing I would mention, looking at it, is clearly we have a really nice uptrend in play. So there is your uptrend. Secondly, I think if you use this parabola, we can do the high there, do the low here, and do this. I mean, I think that's a nice little cup. We're in a handle. Look at the volume just drifting lower in this handle. I think a 20-day test would be very viable. Breakout above 23.75 with increasing volume would measure up $1.75 to about 25.50. So that would be my target.
Okay, let's see. Number 9, CLR. It's our only energy request, Continental Resources.
Okay, yeah, this one is just one that I think struggling, trying to get through some overhead resistance. If I pull up the relative chart, I think we'll see that on a relative basis, it's not very exciting. The group has not broken out in the exploration and production area, and the stock's been in this downtrend relative to its peers and relative to the S&P 500. So, looking at the stock here, I think this is certainly worth noting. This as well. So there are your relative charts. So over the past 2 or 3 weeks, we've begun to see some relative strength. That's the good news. And we've held the rising 20-day moving average. So what I would simply say is let's watch this 20-day moving average, which has been holding. We don't want to lose it because we know we have an underperforming stock. So I don't want to start seeing technical breakdowns. To the upside, need to get through the 2019 high, which is around $48. We're getting close, but we need to get a breakout, and we need to see that relative strength continue to move higher. Those are the 2 things I would look for. Until I see it, I'm really not particularly interested here.
All right. And there you have it, the 10 and 10. And these are the symbols that we just went over. They'll be right up here. I will get those up in the Market Watchers Live chart list. Just go to the Market Watchers Live blog from the articles tab, and the link to the live chart list is right at the top of our blog. Of course, I always put it in the recaps as well. All right, it is now time to move into our final market update. And I just called up our handy dandy candle glance. And not the best day in the market, but looks like the S&P 500 at least is trying to make a comeback. We can see that the Dow really gapped down, has been mostly consolidating sideways. Big move to the downside for the S&P 500, but it has managed to make up about half of those losses. NASDAQ is looking fairly decent. I mean, it is underneath what our close was yesterday, but in comparison, relatively, it is looking pretty good here by down just 0.1%. Mid caps and small caps are down also on the day, about half of their losses from the intraday low made up. And you can see Canadian markets are trending lower, currently down 47 points. TNX Treasury yield is rising, currently at 2.519%. VIX, big move to the upside, pulling back a bit, reading right now at 1339. We have UUP, big gap down, but consolidating mostly sideways after a failed attempt to take back those losses. GLD, big gap up, pulling back though. And we're seeing a reading right now at 122.53. We've got USO, which is at $13.38, up almost 1.75% so far today. And TLT taking a beating, big move to the downside, unsuccessful move to the upside. And now we're starting to see intraday lows tested once again. A quick peek at which sectors are our leaders right now. And as you can see, energy and consumer staples are leading the way. Energy is up a little bit over 1/3%. Consumer discretionary technology also on the upside. All of our other sectors are lower, with the industrial sector suffering the most, down 0.93%. We might see a 1% decline here on the industrial sector. All right, that's all I have for the final market update. I'm going to pass it back to you, Tom. Get ready for my sentiment update.
Sounds good. Earlier, I mentioned that the 5 aggressive sectors, 4 of them were looking pretty good relative to the S&P 500. And I just wanted to illustrate this. This was actually in my blog article from this morning, so I'm kind of borrowing it from there. But here's the S&P 500 rally so far in 2019. Huge move to the upside. And what I like to see are the aggressive areas leading to the upside. So let's start first with technology. So this is not telling us, again, that the XLK or technology ETF is moving higher. Obviously it did. But this is telling us that it moved up faster than the S&P 500. So that's what you want to see, because this is primarily responsible for the gains that we have been seeing in the S&P 500. Another way to look at this, and I'll come back to that in just a second, but another way to look at this is simply to go into the sector summary and to go year to date. And it's very simple to see technology, consumer discretionary, industrials. 3 of the top 4 are aggressive areas of the market. So that's the point I'm trying to make when we look at these, when we look at this chart. So here is the XLK on a relative basis. Look at XLY, consumer discretionary, just made a relative breakout. Very bullish. These are the 2 of my favorite groups. I love to trade technology stocks, consumer discretionary stocks, and they're both performing well. Communication services, I also like. Here is a high. Here was the established low, and we're just kind of in sideways consolidation. So in other words, over the course of the last few months, communication services is kind of going along for the ride. It outperforms, it underperforms, but it's going along for the ride. Industrials, you can see making a huge move up into late February, pulled back, established a relative low, and now moving up. But I think overall, since that December low, we're seeing strength here. The only group that I think we're struggling in, and this is maybe a little bit of a concern, but at the same time, I know why. It's the 10-year Treasury yield, which has been so weak. As the yield curve, turns and starts to move more toward inversion, that normally has takes a pretty big toll on areas like banks and life insurance companies within the financial sector. So this downtrend is obviously something I want to watch. But now that the 10-year Treasury yield has started to move higher, you can see over the past couple of weeks, this has moved back to the upside. Love to see that continue. I'd like to see financials begin to lead again. All right, that's really all I had. Just wanted to clarify a point I made earlier in the show. So let's move on to sentiment. Erin, take it away.
All right, let's do this. And I haven't done sentiment for 2 weeks, so some different things on the charts to show you. Okay, so this is this week's DecisionPoint Sentiment Update for April 8th. And let's go ahead and get right on into those charts. But I'm going to show you what we're going to look at today. Moving average of the put-call ratio, American Association of Individual Investors, the AAII, National Association of Active Investment Managers. We look at their exposure currently to the market. RIDEX ratio is an indicator that Carl Swenlin came up with. We will look at the money flows in and out of some of the RIDEX funds, and that helps us determine sentiment. We will also look at Mark Young's Wall Street Sentiment Survey. And finally, I'm going to finish with a look at the VIX and gold sentiment. So let's go ahead and away we go. Whoops. All right, so let's go ahead and we will start with, if I can get my screen back here, okay. And we will start with the put-call ratio. All right, so at this point, you know, when we were here last time, it was looking like we were starting on our way back up, and that's bullish for the market. But right now we're starting to see sort of this sideways uncertain movement as far as the put call ratio on the CBOE. Same thing going on here for equity put call ratio. I invert these scales. I look at the oversold readings on the bottom, of course, which would be the higher readings. And then I put the lower readings on top because that gives me a really good sense of overbought versus oversold. And right now, when I look at this, we are sitting in what I would call somewhat or really overbought territory. You can see that most of our highs have come right in this area. So my concern right now, really looking at this, is that we might end up turning ourselves back down just because of the hesitation. It seems that there, you know, we took a, especially when you look at CBOE, we were rising and now we started to falter, hesitate. So at this point, I'm kind of looking for a top here on the put call ratio, and tops aren't what you want to see. As you can see, I have these oversold bottoms. That's what we want to see, but not right now. We could be topping here, and it does look like the market might be ready for a pullback. Of course, we're seeing a little bit of that going on today. All right, let's look at the American Association of Individual Investors sentiment. And what we track is the amount of people who click on I'm a bull and click on I'm a bear, and then just the neutral readings from their poll on AAII.org. So I believe anybody can go there and take it. And at this point, we certainly have a predominance of bulls versus bears. And I also watch the neutral rankings, you know, how many people are on the fence. And what I notice when you look in the thumbnail is we're getting a bit of an expansion here on the bull or the bears, and just slightly on the bulls, at least from last week. So when you start expanding this range, you have more people that actually have an opinion. And I think that that's something that you can consider especially bullish or bearish when people have an opinion. Unfortunately, when there's, you know, about half of them, or, you know, 40% of people in neutral, you know, I find that a little less interesting than when people are all in. So at this point, though, with the readings that we have, neutral-wise, we're looking at less than 30% are neutral. So I don't really consider that as anything to think about. What I'm thinking about is the fact we have a preponderance of bulls and we have an elevated bull-bear ratio. So that would tell me that we're looking at a somewhat bearish or bearish situation right now. We should be looking for a pullback this week based on the AAII sentiment. Next up, name exposure. This one's great. We have our active money managers, and they report to us how exposed to the market they are. And this week, wow, I was very surprised to see this very climactic reading here. Clearly, this rally has been fueled by most investors, but apparently active money managers are definitely involved right now. This, I would say, is a climactic reading. This is a high exposure rate right now. And so when you get those high bullish readings like that, it is bearish as far as the market is concerned. The only caveat I would say is that a lot of times, and I'm going to go ahead and annotate, actually I'll do the inspector here. Here we go. A lot of times when you get these high readings, it takes a little while for the decline to happen. So here we go with getting that June reading. Back here, we did end up moving lower right after that. So that wasn't a very good example. But in this case, you can see with a very similarly elevated exposure rate here back in August, it took a little while really for things to turn back down. So anyway, I look at these and I think it's important to note, there you go, there's another one where we started down after these climactic readings, same. There we go, one more time. So when I see a climactic reading like we do now, I definitely start to think negatively about what's getting ready to happen in the market coming into the week. So exposure is really high right now. Okay, next up, let's look at the Wall Street Sentiment Survey. Mark Young asks all of us via email, his group of market timers, whether we think that the next week we're going to be going higher or lower or unchanged. And so we basically look at our charts and say, I'm going to be a bull or I'm going to be a bear. This week I was actually neutral, so I didn't have a vote. So I'm not included in here. I'm one of the ones that didn't, one of the 10% that didn't have an opinion this week. So that is very interesting in and of itself. We've got 53%, more than half of our market timers are bullish going into this week. And you can see an elevated bull-bear ratio here. When we hit 2 or more, that's when it's considered especially bullish or bearish. You know, that's when we start to really look at the fact when you have twice as many bulls as you do bears, that's certainly very bearish. Right now, we're not quite there, but you know, we certainly have quite a few on the bullish side, and the reading is somewhat climactic. So bull-bear ratio at almost 1.5. I would have to say, looking at this chart going into this week, also bearish. All right, next up. The Ridex chart. And here we are. All right, let me explain a little bit about the Ridex ratio and what we do here. Carl came up with a very he's ingenious anyway, but he's a genius. He came up with this ingenious indicator set. Basically, what he found was that, and at the time the company was Ridex, but now Guggenheim manages these funds. And he found out that they report how many assets are in each of these funds every night. And so on a spreadsheet, he started to track it. We would call in the evenings when they posted it, and we would find out how many assets were in bear funds, how many were in money market funds, and how many were in the bull and sector funds. And by tracking the assets, where they were going back and forth, it helped us determine sentiment-wise, money where your mouth is. I mean, it's one thing to do like AAII or even the one I take, the Wall Street Sentiment Survey, and just, you know, say, yep, this is what I'm going to do. But it's a completely different thing. And especially Tom and I know this on Market Watchers. to say one thing, but whether you actually go in there and buy it is a totally different thing, isn't it? And so this is telling us where the money actually is going. It's not just people saying, yeah, I'm a bull, yeah, I'm a bear. This is telling us exactly where the money is flowing. And so I love this indicator, and as much of a pain in the butt it is to get that asset information, I think it's always been worth it. And I will work to always keep this as one of our indicator sets. So what is it saying after all of that? Well, right now you can see that there's been an increase in the bear funds. Money market, we're actually seeing a slight decrease if you look here on the week, but certainly over the past 2 weeks, and like I said, I haven't looked at this in a while, certainly we're seeing decrease in money markets, increase in bear funds, and an increase in the bull funds as well. So again, like I was talking about with those neutral readings, when people are ready to take a stand, I think that is a different feel than, of course, if they're just hands in the air, or I just don't know, or I'm neutral because I think it'll be bullish at the beginning of the week and bearish at the end of the week. Neutral is great, but you really want to see people take a stand. And right now, as far as the assets go, they're taking a stand, but in both directions. So what does that mean? Well, to me, when I look at the chart, it's almost a neutral situation. While we don't have that many people in neutral, the money is going in both directions. And so, it really wipes itself out. But the fact that people are more interested in getting involved one way or the other, I actually take that as somewhat of a bullish sign that people are willing to pull their money out of cash and get involved either direction. So, I would look at this chart as mostly neutral, but I do think it's interesting that more people are, the money is starting to flow in both of those directions. All right. Next up is going to be my gold chart. We'll talk about gold sentiment, and then I'll work my way back into the VIX. All right, so the gold chart. This is not a real head and shoulders. I'll just be honest about that, but it sort of reminds me of a head and shoulders, a little bit of maybe a triple top here. The main thing is it looks like a topping pattern here on gold. And, we went into we had last week, which was not the best week for gold. But now we're getting a nice snapback up toward, we got the gap up and we're continuing higher. We're sitting around that 123 level for GLD. PMO sell signal, but notice on the move, of course, today, we're already starting to see the PMO decelerate. The discount rates have pulled back. We determine discount and premium based on the Sprott Physical Gold Trust. It trades like a stock, but what's the underneath, the actual, what kind of assets they own as far as gold and silver. In the case of Sprott, it's just the gold. It's worth a certain amount, right? And so depending on what you pay for their stock, that determines whether you're buying it at a discount or a premium based on what their assets are. And right now you can see that we're pulling back on those discounts. Gold sentiment, it's the same as any sentiment. If we get a lot of discounts, that means people are bearish. That means that things are bearish as far as sentiment, and that's good news for gold. And you can see how that works. We had the high discounts in here, it moved up. High cluster of discounts here, it moved up. High cluster here, and then we started to see that move to the upside. Right now, we're on the low side. So I don't think it's not great for gold. Given what I was seeing last week, I was very bearish on gold. And, well, of course, now we got the pop to the upside. But I'll be interested to see if that 123 level can be beaten. But right now, gold sentiment discounts are low. That tells me that people are more bullish, and that is bearish for gold. All right, last one I'm going to look at here is the VIX. And breadth, I like to pay attention to. I look for especially these penetrations of the Bollinger Bands. At this point, we came in on Friday, and Carl and I talked about it. It's like, we didn't quite get that puncture of the Bollinger Band to the upside. So in our minds, it was like, well, you know, we could still continue. We could still see some follow on to the rally that that we got over the past couple days. Well, really the whole week last week was looking pretty good. And so we felt like, you know, we could still see that VIX move lower and actually puncture that Bollinger Band, but apparently it just didn't need to. And so, you know, when you get these punctures, that usually comes right around the declines beginning. So that didn't actually puncture it, but we're starting to see the decline nonetheless. All right, and that does complete the gold sentiment. Let's look at our chart here to see what my summary is for you, and I will have this in the Market Watchers Live recap tonight. So the put call ratio, it's moving, it's overbought, but it's moving sideways. I think it's somewhat bearish for the market because it's overbought. And if we start leaving overbought, that is bad for the market. Elevated bull bear ratio for AAII. You know, I'm looking at that as neutral to bearish because remember we got the assets going, or I'm sorry, we have the poll. You know, there were still a lot of neutral folks going in on the AAII, but overall they were still leaning bullish, and that is bearish for the market. Name the exposure rate climactic readings. I think this was probably the most interesting sentiment chart this week. That high exposure is very bearish for the market. So I would expect this week to continue lower. Wall Street Sentiment Survey, too many of us were bullish, and that's bearish for the market this week as well. And when you look at the RIDEX ratio, I'm saying that's more neutral to bearish. I'm leaning more neutral there just because, you know, we did get the funds coming out of the money markets, but they're going almost equally into the bull and bear funds. You can't really say it's anything but neutral, really. Breadth and VIX, you know, we've got the VIX is declining. It tested the upper Bollinger Band. Breadth was somewhat climactic. I was bearish going into this week based on that. So really, ultimately, we're looking overall for the markets as far as sentiment, I would say, in bear territory. And that's all I have for sentiment for this week. Let's go ahead and bring up the poll, right, for Monday setups. I want to see who is winning.
All right. Well, I do want to say before we get into that, last week, because I literally, while you were doing sentiment, I pulled up the prices from a week ago and the prices as of just a minute ago.
Mm-hmm.
And your stock from last week, Darling, was the winner. That was the Darling for the last week.
Oh, okay. It was the one I didn't pick, but at least it
1.82%. Starbucks was second, 1.6%. And that one was picked by our producers.
Yes.
Google was one that I had picked, was third at 0.87%, and Shake Shack was fourth, 0.53%. That also was picked by the producer. So basically what we're going to do is next week we're going to let the producers go ahead and do the show.
Yes, absolutely.
We're going to produce.
Mm-hmm. I like that idea. And you know what, Tom? I think that, you know, we need to be in the same room for that. So we should definitely do that, I don't know, somewhere near a beach.
Well, what was interesting, we'll get into this one real quick, but last week, your pick, USFD, and my pick, FLDM, were the two worst performers out of this. So anyway, but that doesn't mean we're going to do it again this week.
Oh, we put our neck out on the line, you know.
Yep. Well, we got about 30 seconds, but we did have, what was it? Baba leading. Yeah. So Baba was leading. So we'll have to look next week to see whether, you know, which one wins, but I'll keep track of. As soon as the show's over, I'm going to go in and I'm going to record prices for each of those stocks, and we'll see 1 week from today which one comes in.
Yes. And I noticed Domo and Run, our two picks for this week, are second and third. So.
Oh, okay. That's cool.
Not bad.
Well, we have the advantage of explaining our picks to everyone too while they're voting. So
yes,
results a little bit. But anyway, we got to get running here. Do want to thank everybody for being with us today. Please remember to complete the survey as you exit. It's located below your video player. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody, and we'll see you back here tomorrow. Happy trading.